This is our Forex blog for November 16th, 2012, and we're heavily working on automated trading systems, which serves two purposes. One, uh, that's one of our internal projects that we trade our account with, and secondly, the offshoot of those trading systems is buy and sell signals that show up on your chart that let you know when to buy and sell. Normally in our blog video we show our currency meter. Uh, I had to leave two versions of Top Gun running to test some live trading systems, and because of that I can't do the normal blog today. But it's good to bring up a chart and showcase how you can use our software in other ways other than the most simple method I go over most days. Here's a 5 pips per bar range chart, and if you right click on the chart and bring up scripts, go down to FX trade signals. When you add this script to your chart, it will tell you basically when it believes high probability buy and sell signals are generated. And I'd like to share some of the strategies that I use in trading. One is trend lines, fibs, and so forth. When you draw a trend line over a bar's high like this, and I personally like to line it up with as many other points as possible. So I would use something like this because it hits this area, and this area. If you right click on that trend line, that slope, and you hit duplicate, when you project it off the low, typically if price breaks down underneath here, you're going to get counter trend trade like we did today. And sometimes it just tags it like this and explodes up, and other times like you'll see today, our counter trend buy signal, especially the green one. Counter trend signals are lower probability, and that's why most of them are light gray and very tiny. As you can see, this one right here, this one right here, these two, this one right here. But when you get one that's colored in its bigger circle, it's a much higher probability trade. By having drawn your trend lines on there and also drawing your fibs off of previous swings from here down to this move right here, you have the 1.382 fib. It's underneath this trend line here where it's likely to reverse. We have a counter trend buy signal, which has nothing to do with the fib area. It just happened to show up there for other reasons. If you click on the bar, it'll say what it is. Counter trend buy below 4-hour stat low. So this is below our 4-hour statistical low. Let's bring this up on the chart. A lot of traders, if you add all of our best tools to your chart, it becomes so busy that it's totally confusing. That's what's so nice about the signals. They look at about 20 different things for the most part to determine whether to buy or sell. The good news is that you don't have to look at 20 different things. That would probably confuse the heck out of you. If 15 of those 20 things all line up, it takes a trade. So the range projection is one tool that I love, and it's used a lot in our systems, especially counter trend systems. This will show, in this case, the 4-hour bars high and low. This is the average low, this is the average high. As price goes down, it yanks the average high down, projected away from the farthest area here. And one of these counter trend signals is here. When it's underneath the 1 standard deviation area, it almost always reverses. Notice it's at the 4-hour high here, and it very quickly afterwards reverses. Notice how it touches the 4-hour low and goes up. It's kind of falling, but not with even average volatility. It's falling a little bit slowly. And so when it finally makes its move down here, it hits its fib target. It's underneath the 1.0 standard deviation area. It's very likely to reverse. And in fact, if you want to showcase the 2 standard deviations, there's a 95% probability that the market will soon reverse from that area. It looks like it probably even hit the 2 standard deviation one. Yeah, not quite. It's probably a few pips underneath there. So those are some of the things you can do. Another absolutely essential thing you need to add to your chart is the value areas. And I upload these each day and each week. It shows the previous day's value areas and previous week's value area. The previous day's value area is the price most actively traded yesterday. That's the yellow area here. And the smaller green and red ones is where it spent 68% of its activity yesterday. So you can see yesterday it spent most of its time between this area. And when it finally breaks down underneath that value area low, you're going to likely get some reversals. That's why these two signals here are showing up. See that day value area down sell? Because there's a certain bar pattern. The market's weak enough, and this is a major resistance area if price is coming up to it from underneath. And so because of that, you got that these two cells. This is probably a value area buy, which it was. That's what it says. But because the trend was down, you probably would avoid that. Just like you might avoid this sell here because the price had already hit the fib target. It's underneath the trend line. If you sell right here, you might only make 5 or 8 pips, 5 to 10 pips maybe. That's about it. In buying this double bottom right here at the fib target underneath that trend line, remember we drew the trend line off the high, we projected, showed off the low. This is a low probability trade. So by having the trend lines up, it allows you, probably you don't want to take this buy here because it's too close to the upper trend line. And some of the patterns that show up on our charts is very hard to teach a computer to kind of look at support resistance and see prices bouncing up and down, notice the trends down, and to sell this low right here. Because a lot of our systems look at what the lowest low of the day is and it wants a decent enough pullback before it sells, and this is too close to the low. But a human being trading here would decide to take that trade. One of my favorite tools, and this only works live, so I can't really show what it would look like on past bars. It's called FX Build a Trend histogram, and this will use multiple different of our statistical tools. Some of them measure the direction, some of them measure the intensity of the direction, like this one, this one, this one, and this one. And the weights are the first part of the equation: 8% weight, 10%, 6, 5. Daily, weekly, monthly trend, 18% weight for the daily, 13% for weekly, and only 4% for the monthly. Now, that being said, one of the things that you can do is bring up a chart and put it like a 5-minute on it and look at one of our better tools, which is the Atx Trend. This one basically shows you how strong or weak each currency is. And I like to use a 9 period. It's a little faster. This will analyze all the euro pairs versus all the rest, all the dollar pairs versus the rest, and it really lets you know what the trend is. Once this thing kind of did a double bottom right here, notice it wasn't that weak. A lot of euro dollar pairs went up here, and dollar pairs lost their strength, and that's why the weakness all of a sudden fell off. If you sold this move right here, and on the way back down to the low, and you saw it double bottom right here, having no weakness whatsoever, very safe buy anytime you get a double bottom with 1/2 or 1/3 the weakness. And once you saw that on here, notice how it just keeps trending up. And notice all the strength right here. Anytime you get strength or weakness going up and you get a pullback in the currency with no weakness, it's very likely to continue up. You had the same pattern earlier. Notice this fall right here with a lot of weakness. The up move right here had no strength, no strength. So between 2 to 5, without a doubt, you were aggressively looking to sell this. This sell right here would have been one of those instances. And even though our systems didn't generate a sell based on, these things use chart patterns, typically there's 2 entries that we use. One is a pullback like this, and another one's a little sideways rectangle pattern. Those are the only 2 patterns that we've always traded and pretty much have taught for the last 6-7 years when we used to do the live classes every day. So when you see a currency that's this weak like this, right, and you see counter trend moves with almost no strength, you want to sell it. It's that simple. Now, when this thing rallied up here earlier, it had a little bit of strength. You don't know if it's going to reverse there on the 5-minute chart. If you draw your fibs from the highest high to this lowest low, guess what? It's a 38% Fibonacci area. It came up to that area around 8 or 9 o'clock. And if you look at this, let's scroll back around 8 or 9 o'clock, right? Here it is, 8 to 9. Not only is that a 38% retracement, let's draw the fibs on this chart here as well. Not only is that 38% retracement, it's a half number, which tends to be resistance when price is coming up to it from underneath. And it also happens to be the previous week's value area low. This is the point of control for the previous week, the price most actively traded last week, and the market spent 68% of its time between this area and the green area, which you can't see, which is above. So this is a major support area. Once it gets broken, it's likely to be major resistance. There are many reasons to sell this 2750 area. One is the 38% retracement. Our counter trend signal shows here. If you click on the bar, you can see counter trend outside linear regression band, which basically means this move up was a little bit too aggressively fast, and that's one of the methods that shows counter trend. And so you want to sell here, and if you were to sell here, you want to put your stop. If you were going to go away and not watch it, your stop could be as close as a few pips above the 50% level here and the point of control of yesterday. It's not likely to go above this area and not continue going. So this is the closest stop you could have without having to watch it. And if you wanted to set your profit target without being here to see what it's going to do, this is a very high probability profit target. And I always, if I am going to put a trade on and disappear, I'll set my stop, set my target. This is the 4-hour average low, so you don't know if it's going to explode through there like it did today. I put my stop a few pips above that, a few pips above the 1.382. So if it works its way down here, you have your target already set. Now if you're watching this, this is a likely target right here. Counter trend buy signals are showing up. You might want to exit half your trade if you were watching this live, and then put your stop underneath or slightly above this area, and if it wants to continue down, by all means hold it. Draw your fibs off this last little wave, and if it does make another move down, this is likely to be your maximum profit. Notice the 1.382 of this little tiny wave lined up with the fib target of this area here too. This is what's called a Fibonacci cluster. And so anytime two fib areas, whether it's fib profit targets in this case, or a fib profit target and a Fibonacci retracement level off of a longer time frame move, very high probability area. So that being said, every night I spend 30 or 40 minutes doing Fibonacci analysis for my own trading, and I upload those areas. And you can add it to your chart by going to trading zones. These will automatically showcase areas that I think are likely to be support resistance. Now, the previous day's move was up, and so therefore my fib target was very likely to be above the high here. This move down here, you have to draw your own fibs intraday, and you come up with these areas. One last thing that our tools use are FX Trend reversals, and you can add these to any time frame chart. I like to have a separate layer up, which allows you to, let's say this chart right here, I want to look at it, but I don't want to look at it throughout the day. I might put it on layer 10, right? I hide layer 10, and guess what? It's gone. If I want to see it real quick, bring it back up. And so oftentimes I'll have charts lined up where I can look at the same exact symbol with a different time frame or a different chart with different indicators on it to get a better feel for what's going on. And that's why we have 20 layers. Most professional traders have multiple monitors. I use 4. I think you can get away with 2 or 3. But one of the tools that I like is the FX Trend reversal. This is phenomenal in letting you know when the market's going to reverse. And it showcases 15-minute bars, 30-minute bars, 60-minute bars, and 4-hour bars, trend reversals, and trend reversal triangles. So you can see there are a ton of counter trend signals right here. And anytime you have a counter trend signal, it doesn't always reverse and explode up. But you can see the price kind of stalled here, and it did inch its way up about 20 pips, 15, 20 pips. And anytime you have counter trend signals like that, usually the next wave down is going to be the lowest low. And that's exactly what happened. Price came down, and it actually tagged the 1.618 of this little move here. If you go back a little bit further, so this is a fib cluster on multiple different time frames. This swing intraday, it hit the 1.618. From yesterday's high to this, it hit the 1.382, and as you saw in this other chart over here, it also hit the 1.382 of this little tiny move right here on your range chart. So there was a major cluster down there around 26.94 to 26.91. Very tight 3-pip range to allow you to get into trades. So you can use all the old strategies that most professional traders use, like trend lines, fibs, but when you add that to the value areas, when you add that to our real-time momentum tools, and value profile charts work on every time frame. If you want to see what happened during the previous hour, where most traders have their positions, you can actually even bring that up as well. And I do this myself. I like to know what the previous hour's value area intraday is. So you can set this to 60 minutes. And this is actually going to download tick data and show you every hour of the day where most traders have their positions. The yellow line is the previous hours. So this price right here, 27.10, during the previous hour, this is where most trading activity happened. And you can clearly see that on the chart here. It spent a lot of time right there, and that's why it's showcased here. This is the red to green areas where it spent 68% of its trading activity. So anytime price is underneath the point of control, it's a pretty high probability place to sell. It came up to it, couldn't get above it. That's not a bad sell looking at it with this in mind. Notice how it acted as resistance here. And frequently when it goes through these areas, you know that traders that, let's say, tried to buy the low or sell the bottom, they're losing money now because most traders during the previous hour had their positions right here. When it goes from below to above it, they're losing money. And that's one of the things that added fuel to this, counter trend move. So that's another thing you can use to stack your odds. As long as the currency stays underneath the point of control of the previous hour, the trend's down. In this area right here, notice it couldn't get above that area, and when it broke down right here, anybody who was long during the previous hour is long right here at 27.46, added fuel to this next down move.